Hey traders, Jason from Lever Brothers. So let's check out the state of the market. Obviously, the market's done really well. It's been trending up, higher highs, higher lows, all that stuff. Virtually every week, all-time highs are printed. Got a little scare last week on Friday when, trade and tariff news from between China and the U.S. kind of ramped up. So we'll see how that fits in everything. But let's check it out. We're going to look at the S&P weekly and daily, and then we'll check out some breadth readings. All right. So here is the S&P weekly. Since the April low, obviously we've been in a huge uptrend. It's been riding its 8 EMA up. That's the light blue line here. It has offered support several times. Again, higher highs, higher lows, really good rally. Not just a really good rally, but like one of the best 3, 4, 5 month rallies in history. Could we fall off here and have a little bit more weakness? Of course we could. Typically what happens in an uptrend, and you can look back left on the chart, is that the market will follow its 8 up and then come down and test its 21. It'll follow its 8 up, come down and test its 21. This was the carry trade. It ended up double testing the 21, follow the 8 up, test the 21 here, follow the 8 up, and then it finally lost the 21. As you can see during when tariffs were first announced. Now we've been following the 8 up, and there have been no tests of the 21. So could we lose the 8 here and drop and test the 21? Sure. Why not? Okay, it could happen. Do I want it to happen? Actually, I do. I think the market is so strong and so bullish right now that I'm actually hoping for some weakness so I could buy some more stocks at lower prices. So I would be all for, a couple weeks off here, pull back. I'm not predicting that. I'm just saying mentally I'm prepared for it, and I'm actually kind of hoping for it. But this steady move above the 8 with no touches down to the 21 kind of tells you maybe we're due for one. It doesn't have to happen, especially this time of year. If it doesn't happen in the next week or two, then it probably isn't going to happen because, typically the market is weak in August, but not this year. It's typically weak in September, not this year. It wasn't weak after the Fed. The market has had a lot of opportunities to drop, and it hasn't. So when the market is supposed to be weak from a seasonality standpoint and it's not, that's bullish. Okay, I mean that's actually super bullish, really bullish. When the market does the opposite of seasonality, pay close attention. So right now the market is super strong. I would completely welcome a pullback here to the 21 on the chart. But if it doesn't happen in the next week or two, it's probably not going to happen. Here is the S&P daily, okay? Again, higher highs, higher lows, riding trend lines up. No major warnings here. Typically what happens is you get a move up, come back to the 21, move up, come back to the 21, move up, flag sideways to the 21, move up, come down to the 21. It lost it for a day, move up, come down to the 21, and you can see how it just kind of rides that 21 up. It comes down, and then just last Friday we lost the 21, and now we're double touching on the 50. Okay, could it lose the 50? Sure. Okay, we can get a bounce here and then a roll over, and maybe it comes down and tests. Let me get rid of this stuff. Maybe we get a bounce here and then it rolls over, takes out the 50, and maybe we test some of these lows from, this was August, this was early September. Maybe those lows get tested. I don't know. Maybe this double touch here at the 50 holds. We don't, nobody really knows. But bottom line is the trend is super strong, super solid. Market's doing really well. It doesn't even matter what happens in the next week or two. If it's weak, if it's strong, bottom line is the trend is much more likely to continue than to reverse lower. All right, let's look at some breadth readings now. All right, here is SP 500 up top versus the 5-day moving average of the NYSE AD line. So what stands out to me is, first of all, we have a negative divergence in place. We had one in place, you can see here, and the market fell over here. Okay, so even without the Trump news on Friday, we were due because breadth was starting to weaken. Then we got a flush down, but this flush down isn't that much different than this. It's not that much different than this. It's not that much different than this. I would consider it like normal weakness within an overall strong market. If I had a concern, it would just be, if I look here, there are just no high prints. Okay, going back all the way to July, there's just no high prints. Typically what you get is you get like a high print, and that's like helps the market achieve like escape velocity, and then it could float higher. Okay, coming out of a low, you get a high print that again achieves escape velocity, and then the market could float higher. So we've had no high prints here since early July. So market's super strong going up, but yet beneath the surface, there's definitely a lack of, energy there. Okay. And then of course the divergence here formed and we pulled back. So overall, not a huge concern, but I'd like to see some better prints, like some higher prints, some, evidence that advanced decline line is stronger than it's been, to give me an idea that participation is better. But again, this is only the 5-day moving average. It's close. So backing up a little bit, here's the 10, the 20, and the 50-day moving average of the AD line. Okay, negative divergence here. As the market was moving up, negative divergence with the 20. The 50 had been trending down. So there was, as the market was moving up over here, we were already getting some internal readings that were deteriorating. Okay, we were due for a pullback. It just so happened that Trump induced the pullback with his news, but that was in the works anyways. Okay, so now that we've gotten a stiff drop, what are we looking for going forward? We need the 10 to get above zero. It's been trapped down there for almost an entire month. We need the 20 to get back above zero, maybe back test and then move up from there. The 50 has been slowly declining. We would like to get it up to a better level. Okay, so there's definitely some deterioration looking back, not just at 5 days, but like 10 days, 20 days, 50 days. Okay, we need a little bit better participation. The market, as it's gotten higher, the gains have been concentrated in a smaller number of stocks. We need some improvement here. Okay, and when you look at this, you're wondering well, are we double bottoming right here between Friday and today? Is that it? Are we going to go just off to the moon? I don't know. The AD line doesn't really tell us that's in the works. Okay, with the 10 down here trapped below zero, I'm more likely to think that if we continue up here, if this doesn't come above zero, not that it has to get up that high, but if this doesn't get above zero and give some suggestions that hey, advances are actually leading decliners, then I'm thinking whatever bounce happens here is probably going to fail until we can get some improvement from the AD line. And then here is the actual AD line. The other curves were like the moving averages of the AD line. This is the cumulative AD line. Lower highs here, higher highs from the market, deterioration taking place. Again, even without the Trump news, we were probably due for a little bit of a pullback. It didn't have to be a big one. We had a little drop here in the beginning of September. We had a drop here at the beginning of August. There was a drop here over in May. Okay, we were due for one of those types of drops. Okay, so now going forward, we want to see the AD line here, start trending up, start moving, higher highs, higher lows. If we get weakness here and then we come up and here's the 21-day moving average, if we get rejected by that and move down, that's going to be an issue. Okay, it's kind of like what happened. If I look over here, I'm going to look over here where the AD line came over here, dropped below the 21, got trapped under the 21, pushed below, came up, pretty much got rejected again. Okay, so if that happens again, then we're going to have a bigger pullback, but so that's what I'm looking for. We drop below the 21 over here. So if we get trapped below the 21 over here, then we're going to probably leg down again. Okay, I showed you the weekly chart where we've been riding the 8 up. Well, the scenario where we're going to lose the 8 and then we're going to drop to the 21 is if the AD line here can't get above the 21 and actually does what happened here where it kind of gets rejected here, rejected again, and pushes down. All right. So a few other breath readings. Here is the SP 500 versus Russell 3000 stocks above their 5-day moving average. If I were to draw some sort of linear regression channel, it's been declining for more than 2 months. 2 months. We'll call it 2 months. Okay, so as the market has moved up, each time the market has moved up, less and less stocks are trading above their 5-day moving average. Okay, at first it doesn't matter, then it does matter. Okay, so at first the market can keep plowing forward, but one by one, stocks start losing this moving average. Eventually, that's going to take a toll. Okay, so we got a flush over here Friday. We got a bounce now. We need a bigger bounce and a lot more improvement. Otherwise, the market's going to be held, probably at best cases to move sideways, and worst cases to actually move down. So here is Russell 3000 stocks above the 20-day moving average. Similar situation. The market's moving up, higher highs, higher lows. Practically every week, it's printing an all-time high, and yet the number of stocks above their 20-day moving average has been declining. And right over here, we got a bounce into, last Thursday, we got a bounce here, only up to 50%. Okay, so the market was hitting, all-time high over here, and less than 50% of stocks were above the 20-day moving average. Okay, that's an issue. Okay, we got deterioration taking place beneath the surface. More and more of the gains are being concentrated in a smaller number of stocks. We need better participation. And last one in this group is stocks above their 50-day moving average. Similar situation, market moving up. Number of stocks above their 50-day moving average is declining. And right now it's sitting at just under 40%. Okay, you'd expect a big flush because of last Friday, but even before the flush happened, you had, right over here, you have like 50%. So this market was up at all-time highs, and yet this had been declining, and only half of stocks were above their 50-day moving average. Okay, so deterioration definitely taking place. And again, it's my opinion that even without the Trump news, we probably were due for a little bit of a mini correction anyways. All right, last family of charts. This is all stocks, the 1 month high low. Okay, so number of stocks printing a 1 month high versus a 1 month low. And you could say slight, it held up for the most part. There's definitely like a linear regression line drawn there, would be slanting down at the same time the market is moving up. Tried to get a little breakout there, but lost it. So, each time the market would move up and print a higher high, there were less stocks doing the same thing. Okay, the 1 month highs versus 1 month lows were coming in at lower and lower levels each time the market pushed higher, and eventually it just took out a support line there and just collapsed on Friday. Now we need some improvement. Okay, if the market's going to go up, then this has got to get back above zero. It's got to stay there. Okay, but if this gets trapped under here, if this goes, if this comes up to, during this bounce, if this goes up to zero and then gets rejected, and we get, a couple weeks of the print hanging out below zero, then the market's going to struggle. Okay, you look back over here to the January, February top where we got to push down, moved up, got rejected by the zero line, and then headed south again. Okay, if the market's going to bounce here, this needs to get above zero. It hasn't happened yet. All right, and then this is the 52-week high-low. And for the most part, this has been just hanging out in a range. Okay, mostly above zero with dips below. It's been doing fine. So while there's deterioration on the shorter term with, 5-day moving average, 5-day moving average, 20-day moving average, 50-day moving average, and like the 5-day high-low, 1 month high-low, the 52-week high-low has, come off its highs, but it's still maintaining a pretty decent level. All right, so overall, market's doing great. Weekly chart trending up, daily chart trending up, higher highs, higher lows. Trend is super strong. Market's in great shape. It's bucking seasonality. Everything points towards higher prices, but there's been some deterioration among some of the breadth readings, stocks above moving averages, advanced decline line, high-low data. Even without the Trump news, we probably due for a little bit of a pullback. Now going forward, if we're going to bounce here, that's great. But the breadth readings need to get up to better levels. If they don't get up to better levels, we're probably going to leg down again. But if we leg down again, it'll be a buying opportunity, not a reason to panic, because I think the stage is set for a really good end-of-year run. All right. Hope you got something out of this, and I will see you next time.